1. Stock market today. Dow, S&P live updates for July 18, 2025. Fed rate cut. Crypto news. 2. Top Fed official pushes for July rate cut despite Trump's Powell replacement drama. 3. Trump's top Fed chair pick demands rate cut. What you need to know. 1. Stock market today. Dow, S&P live updates for July 18, 2025. Fed rate cut. Crypto news. The financial markets are telling two completely different stories right now, and it's creating a fascinating tug-of-war for investors. On one side, you have a powerful signal that easier times are ahead. On the other, a stock market that simply can't seem to make up its mind. Let's start with the bond market, which saw a significant rally on Friday, July 18th. This activity pushed bond yields lower, particularly for short-term treasuries. The primary catalyst for this optimism was a clear and forceful statement from Federal Reserve Governor Christopher Waller. He didn't just float the idea of an interest rate cut in July. He strongly reiterated his support for one. But here's where it gets controversial. Waller went a step further, hinting that he would be prepared to formally dissent if the other board members vote to hold rates steady. A public signal of a potential split within the Federal Reserve is a major development, suggesting a growing internal debate about the right path for the U.S. economy. Bolstering Waller's case was fresh data from the University of Michigan's Consumer Survey. The report showed that Americans' expectations for inflation over the next year have cooled considerably, dropping from 5% down to 4.4%. For the Fed, this is a crucial piece of data, as it provides them with more justification to cut rates without appearing to be soft on inflation. Meanwhile, the stock market was a picture of indecision. The S&P 500 barely moved. 2. Top Fed official pushes for July rate cut despite Trump's Powell replacement drama. Here's the bombshell. A key Federal Reserve leader who could replace Chair Powell is doubling down on demands for an immediate interest rate cut, even as the economy shows surprising strength. This dramatic push sets up a high-stakes showdown that could reshape America's economic path. But here's where it gets controversial. At a New York conference this Thursday, Federal Reserve Governor Christopher Waller boldly advocated for slashing borrowing costs at this month's policy meeting, July 29th to 30th. Waller's surprising stance, that the Fed must act now to protect the red-hot job market, declaring, "With inflation nearly at our 2% target and limited upside risks, we shouldn't wait until employment weakens before cutting rates." He specifically urged a 0.25% reduction, 25 basis points, emphasizing this should be a preventative strike rather than a crisis response. Now, this gets really intriguing because Waller isn't just any official. He's widely seen as a top contender to replace current Fed Chair Jerome Powell. Remember, former President Trump, who appointed Waller in 2021, has repeatedly attacked Powell for keeping rates steady and vowed to replace him next year. Treasury Secretary Scott Bessent just confirmed a formal process is underway to pick Trump's Fed nominee, with an announcement coming very soon. And this is the part most people miss. Waller's call flies directly against most Fed colleagues. While Waller warns the labor market is on the edge and argues the Fed should ignore temporary inflation from Trump's tariffs, others like Fed Governor Adriana Kugler insist patience is vital. Kugler countered Thursday that with tariffs potentially pushing prices up and stable employment, rates should hold steady for some time. Futures markets agree. They're currently giving July rate cuts under 10% odds. But wait, does Waller's argument hold water? Since his last rate cut plea, we've seen stronger than expected job growth, 147,000 new positions in June, and retail spending resilience. Inflation has even ticked up slightly, normally red flags against cutting. Even fellow cut advocate Michelle Bowman, vice chair for supervision, hasn't reaffirmed her position after these robust reports. Most economists agree current data doesn't scream emergency cut. So why the pressure? Trump's relentless criticism provides crucial context. He continues blasting the Fed for not cutting rates in 2023, and allies are even exploring the Fed's $2.5 billion building renovation as a potential legal avenue to oust Powell, a move one Fed official privately called legally dubious. The critical question for you, is Waller showing visionary leadership by acting before crisis strikes, or reckless haste amid economic strength? And could this debate actually be about political positioning for Powell's job? Share your take in the comments. Do you side with Waller's preventive approach or the majority's wait-and-see stance? 3. Trump's top Fed chair pick demands rate cut. What you need to know. In a bold move that aligns with President Donald Trump's demands, one of his top picks for Federal Reserve Chair, Christopher Waller, has doubled down on his call for a rate cut. Waller, a Federal Reserve governor, argued late Thursday that the central bank should cut interest rates during its July 29th to 30th meeting, lowering the policy rate to 3%. This stance partly aligns with Trump's demands for a rate cut to 1%. Meanwhile, current Fed Chair Jerome Powell has maintained the central bank's key borrowing rate within a range of 4.25% to 4.5%. Waller's call for a rate cut comes amid a slowdown in consumer spending and job market gains. He argues that the Fed should look through tariff effects, adding that the impact on inflation rates will be a temporary pressure. This stance is in contrast to Powell's wait-and-see policy, as he assesses the economic impact of Trump's tariff blitz. But here's where it gets controversial. Waller's comments come as tensions between Powell and Trump have reached a boiling point in recent days. Trump has floated the idea of firing Powell and has called his handling of monetary policy lousy. The president has also fixated on renovation cost overruns at the Federal Reserve's headquarters, a project slated to cost $2.5 billion, funded by the Fed, not taxpayers. Of Trump's potential candidates to succeed Powell, Waller is considered the veteran academic of the group. He has also reiterated the importance of maintaining an independent Federal Reserve. But the question remains, should the Fed cut rates as Waller suggests, or should they maintain their current policy as Powell advocates? And this is the part most people miss, the delicate balance between political influence and economic stability. What do you think? Should the Fed cut rates, or should they maintain their current policy?